Welcome to the Nest Show, the podcast that brings you insights into the crypto market, trading and investment experiences, and what we're looking forward to as we navigate this space together. Today, we're joined by one of the premier traders of Japanese candlestick patterns, as well as a self-proclaimed newbie guide, Big Cheds. Cheds got started trading penny stocks in 2014 and found success transitioning those skills to crypto altcoins in 2017. Cheds was diagnosed with cancer later that year, and to his great credit, used his time in treatment and recovery to complete a beginner's trading guide and continue to hone his skills as a trader. In addition to all this, Cheds is publishing his memoir in about a month. On top of it all, Cheds is a founding analyst at Bitcoin Live and an all-around high achiever and great guy. We discuss adversity, luck, overlapping experiences trading penny stocks and crypto, and much more. You will not want to miss today's Japanese Candlestick Masterclass in this episode of The Nest Show. Once again, thank you for joining us, and we hope you enjoy the ride. What The Nest Show is, this is a podcast brought to you by the Birb Nest community, an independent crypto and forex-centered trading community built to sharpen each other in capturing opportunities in the markets while protecting capital along the way. What this is not, trading advice. We are not financial advisors, and you should not regard any information here or in the Nest Club as financial advice. You should always consult a licensed financial advisor before making any financial decisions. All right, folks, thanks so much for joining today's episode of The Nest Show. And guys, we are so excited. Today we have Cheds. Cheds is a Japanese candlestick trader on Twitter, newbie helper. He's traded penny stocks since early 2014 and got into crypto in early 2017. He's got a lot of engagement on Twitter, and I am so excited because Cheds is also a cancer survivor. And we have so much to speak on today. Cheds, thank you so much for joining us, man. How are you doing?
I'm doing really well. I want to say thank you. It's absolutely an honor to be part of your program. I enjoy the work you do. And I think platforms like this, it's a great opportunity to stretch out some topics, to really let those ideas bounce around in kind of a candid format. And I'm really glad to be part of it.
Absolutely, man. And we are so happy to have you. And I appreciate that compliment. And of course, we have Adrian, Crypto Birb himself. Adrian, what's going on, man?
Hey, I'm doing great. I hope you guys are doing great too. I'm extremely excited for Cheds attending us today for the podcast. Like I personally have been, a huge supporter and a fan for a long time for Cheds. And yeah, it's super exciting to have you here.
Cheds, I learned pre-show that you were a cancer survivor. And, obviously in today's marketplace, people are going through unprecedented times and have very high levels of stress and worry and just kind of, fight or flight instincts kicking in. And I wanted to speak with you a little bit about, one, your journey as a cancer survivor and also your journey through the marketplace and how you came to join us here today.
Well, I came to join us here today because a real swell guy named Birb asked me. And so that's the answer to that part. Just kind of the short version is back in 2017, I was diagnosed with lymphoma, stage 3, both sides of the diaphragm. But I was really lucky, great medical care. I started chemotherapy right after that. Crypto kind of came into my life earlier that year. And because of crypto, I dove right into it and spent a lot of my time and energy focusing on crypto rather than chemotherapy, rather than kind of the struggles I was going through. It gave me a nice an oasis, kind of away from my own troubles. Along the way, I met a lot of people, continued to sharpen my skills, and I decided I was going to write a book. 2 years later, I'm getting ready to publish my memoir on fighting cancer. Unfortunately, my mother actually was diagnosed with cancer as well after I beat my cancer, and she passed away last year. So I've been learning to grieve, and I talk about that in the book. So that journey's made me a stronger person. And like I said, thank you for asking about that. In terms of crypto just been a wonderful thing for me. It bears a lot of similarities to that penny stock market, especially the altcoins where you have extreme volatility on low volume. And that's something I hope we'll talk more about later, is how important volume is in terms of interpreting, candle signals, especially, talking about Japanese candlestick trading, which is my go-to for analysis.
Right on, man. That's fabulous. And pre-show, we were speaking a little bit about luck, and I was heartened to hear you say that you consider yourself luckier than most, in spite of, some of the challenges that you just mentioned. Just as a point of curiosity and kind of a philosophical digression, how would you characterize or define luck? And would you say that there is a seed for luck to sprout?
I mean, you could go any way. You could really go any way with that question. Obviously, there's the cliche chance meets opportunity. Being luck, you always want to be prepared. And I'll kind of jump back to that. But for myself personally, I was just born at a time, and I had a good family. They took care of me. I grew up as a white male in the Northeast, great education. I mean, I feel lucky. That's lucky. You could have been born anywhere under any condition. And even with that tragedy, I've just been mistakes I've made in my life that I've been given second chances for. A story I talked about in the book is when I was in the hospital at one point. I shared a room with a guy. He was about my age and clearly was like a heroin addict, and he spent half his life in jail. And it's like I've never been arrested, and it's like, did he get the second chances that I got? All the times I was driving drunk when I was younger, and I never got pulled over. Any one of those times, my life would have been differently. Just something like that, for example. All the trees I fell off of, and I didn't break my neck. When I was climbing as a kid. Kind of that's what I say in terms of luck. Can you control luck? I play a lot of poker, and you think about luck, but luck is kind of putting yourself in a position where hopefully you don't have to fade too much bad luck. You just got to try to put yourself in a good position, and that's what I would say.
And that's fascinating to hear. And Adrian, I'd love to extend the same question to you. How would you define luck, or what's your kind of personal orientation to the idea of luck?
It's a very hard question to answer, actually. I'm pretty impressed with what Cheds just said on that. And there's a lot of in common with regard to what I perceive luck to be, And for me, luck is a kind of like a connection, or rather, I should say combination of your own kind of like predispositions with opportunities given to you by life from like exteriorly. So luck is nothing when you don't really help it, When you are given chances and when you try to actually respond to these chances, like these opportunities, when you do your best with regard to what you are skilled for, what you can do, what you want to learn, what you want to achieve with that, if you help these opportunities, right? These opportunities given to you by life around, as an effect, there is a success being born in a way. I think the luck, if I were to put some tighter definition on that would be the combination of own predispositions, the exterior kind of like exterior situation, opportunities, I should say, as well as goodwill. As a result of on the right hand of this equation, in a way, when we sum it up, is what I would call to be the luck.
It's a fascinating notion, especially when posed to traders. What luck is, because we've all had our fair share of ups and downs. But when you look at luck just on its face, it's a subjective experience or kind of a subjective characteristic. And just put in simple terms, I think that luck starts with gratitude or appreciation, because there are folks who have all of the gifts or opportunities in the world, but if they have no appreciation for them, you will not be able to convince them that they're lucky. All they will see is all they don't have. But the same thing goes for someone, that you pass down the street who maybe hasn't had the opportunities or the financial success, yada yada, but who has a deeper level of appreciation for the food on their plate or the clothes on their back, roof over their head, etc., and could consider themselves the luckiest person in the world. So I think that as traders and just as human beings, we do ourselves a lot of credit, just to enhance gratitude and enhance appreciation for the stuff that we do have. And I think that goes directly to the level of personal success and your trajectory over the course of your life with whatever you do. I have a lot of experience, especially as of late with, kind of gearing my, call it internal vibration, like I want to vibrate at a higher level, which sounds really metaphysical and ethereal. But after putting that into my trading practice specifically, and really keying into focusing on what I want to cultivate and reducing the things that I want less of. I've seen a great impact, and I feel like that goes deeply into the work that we do, both on ourselves as people and as traders. When I heard you, Chad, speaking about luck a little bit in pre-show, I was just so excited to hear about that, because we, especially in times like these, we could all benefit from greater levels of appreciation, for the things that we do have, as we seek to, kind of stabilize the ship in these uncertain times. Just getting right into it, I was so excited to see as well that you came to crypto from penny stocks. And I just wanted to extrapolate that experience a little bit and talk about where the paths have converged, where they've diverged, and maybe we'll get into a little a divergence talk with you and Adrian on that.
So I started trading pennies back when marijuana became legal, and there was a big boom in the penny stock market. And in that market, you could see the gains are ridiculous. I mean, you could see a 300% gain in a day, and a lot of that had to do with that volatility, had to do with the fact that there wasn't a lot of volume. These things were either thinly traded, and so they were kind of explosive. And in that sense, there's a lot of parallels to the altcoin market. So what I did and just to kind of circle in what we talked about before, a lot of the work I did in that penny stock market became kind of a teaching method. And I started becoming essentially a newbie helper. And I started a blog, chedstrading.blogspot.com. And so a lot of that stuff that I learned from the penny stock market can be applied to crypto. A lot of it's trading psychology. A lot of it is understanding, it's like poker, understanding your opponent, understanding the rest of the field, reading the sentiment, of the other traders. So there's kind of the volume analysis, and then there's the kind of social analysis that overlaps, in my opinion, from that penny stock to the crypto market. So it was a really easy transition for me. All the charting stuff I did with pennies worked in crypto, and it worked better because there's more volume, there's more consistent volume. So you get a lot of fake signals in the penny stock market because there's not a lot of volume behind the candles. But with the crypto, in certain cases, in many cases, you'd have enough volume to draw some type of a solid signal, and that's where Japanese candlestick trading really comes into play. And when it drives me crazy when I see people posting charts on Twitter, hey, look at this bullish engulfing, and then I can't see the volume behind it because there's no value in that signal. The strength of any Japanese candlestick signal is based on the volume behind it. That's why volume is so important. That's why I always emphasize it in my analysis and when I'm teaching other people. But I recognize that it's only my approach. I'm not an expert in any field. I can only explain what I think I know, and then kind of sit back and listen and try to absorb what other people are saying, and then I can reach a greater wisdom myself. So that hopefully answers your question, essentially, of how I started with pennies and how it kind of migrated into crypto, and what I see as some of the overlaps.
Absolutely. And I wanted to follow up quickly on the what platforms or exchanges that you are trading penny stocks on, and whether or not you see a greater similarity with any given crypto exchange, or if it's just kind of across the board with small caps.
So these were like micro caps for the penny stock market, and you really only traded them I used Fidelity, I used E-Trade as a broker, and they kind of handled everything. And then some of them that didn't have strong reporting, didn't file their quarterly reports, yearly reports, you can only do in one exchange or the other. So there was kind of varying degrees of like how hard it was to actually trade it based on how shady it really was. And then there was a program called iHub, Investors Hub, which I just had on my tablet, and you just read the message boards. And the psychology of it is amazing, right? It's very similar, and you see a lot of it with crypto. So like the ugly secret behind it is the whole purpose of the penny stock market is for people to sell debt, convertible debt, and then that convertible debt to be dumped on the retail market. So you have a penny stock company that comes out and they say, we invented like weed ice cream or something. So everyone gets excited, and retail people, they pile in to buy it. What they don't know is a year ago, someone lent them $5,000, and that $5,000 now converts at 50% or 70% discount to market. They convert it, then they sell it into the float. Float gets bigger, blah, 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 blah. So that's going on. And while that's going on in the message boards and the price is going down, people say, oh, look, they're lowering the price. Something big must be coming. Oh, they're just trying to get cheapies. They're always kind of like trying to convince you of a narrative. It's all about narrative building. And you see that on Twitter. What was it? Like XVG's Verge had that New Year's Eve thing, and it was all, it's all this, so it's all the narrative. And what does that lead to? It leads to these trading psychology. It leads to these concepts of, are you buying the rumor or are you buying the news? Buy the rumor, sell the news. So you have the psychology that leads to kind of these common sense things, sell the hype, buy the blood, stuff like that. So you try to, that's kind of forms the basis. A lot of the things that I learned, I helped to pass on, and that I found worked really well in crypto.
Adrian, do you have any experience in penny stocks, or would your experience in this capacity mainly be in small cap alts?
Like in practice, when it comes to penny stocks, like the experience that I've got comes from watching The Wolf of Wall Street in practice. But if you remember, like I believe it was by Martin Scorsese and DiCaprio, right? And
I can't believe they made a movie about those memes. That was great.
Yeah, it's insane. Jordan Belfort and all these guys like Stratton Oakmont, with how they kind of like pumped and dumped, all the penny stocks. So the other day. So but in general, I personally prefer emerging markets that are given by the industry itself, right? Personally, I'm kind of like young. I'm 27 years old. That's not much of a, I would say, like I'm not a really old man, although my backbone is cracking me left and right at times. But yet still cryptocurrency, like that would be my main leading field. Although I definitely right now I'm preparing very solidly, and I mean like solid stuff, working my way into bigger money markets with regard to precious metals. I'm searching for really big position in silver right now. On top of that, I'm definitely going to get into emerging markets, okay? And also in Poland, listed on Polish exchange, but it's not the most popular one all over the world. But Poland, as a market, is considered to be emerging market. And during the recession times, firstly, the first impulses, like people exiting, or actually should I say, like withdrawing the capital from high risk markets that are stocks in general. Not to mention, that it was pretty much like easily to be foreseen for just based on what Tesla did, going crazy, the double X, like triple X or whatever own performance over 1-2 months. January, February, when it kind of like rocket launched, towards $1,000 per share. It was crazy to watch. When such situations come, when the market bubbles like comes to burst, the capital always outflows from to the, well, let's quote unquote it, safe haven currency, that is USD, that is dollar. It's kind of like a regular scheme, I would say, concept and sketch that first of all, like people tend to withdraw their money to dollar, but then when the recession comes, well, the Fed comes to put some quantitative easing or just simply pump in the market. That would just boost and actually grow the inflation. So at the same time, people after not only investors but like just regular people, I would say, they start noticing that with the same money that they pretty much have saved or had saved before, they tend to pay much more for the products that they, well, compared to what they used to pay. So in general, they wake up to lower money value. And when they realize that, it takes a couple of months most often to happen, they withdraw and actually just move their capital from the safe haven currency, again, quote unquote, to actually precious metals. And every second kind of like cycle, capital flows heavily into emerging markets. So I expect emerging markets in the next couple of, I would say, years in general to perform really, really well. I'm not talking about, just regular FANG like Facebook, Amazon, Alphabet, Google, right, Netflix, and etc. Like just as similar to these top capitalization, tech companies anyway. The emerging markets is what I'm definitely getting good and deep dive in the next months. as well as I said, silver, precious metals, right? So these two groups are not only, I think, for me to watch, but also are on the eyes and on the monitors of many investors right now that are actually just wanting and preparing themselves to make a real big deal of money when everybody around is kind of like losing with this recession. In general, this interest is definitely spreading of mine. I mean, this interest of mine is definitely spreading across not only crypto itself, but it's just going way beyond right now. Also with real estate, but just it's not the best time for sure to, just go heavily into real estate. But all these markets, they at the same time differ a lot from crypto, and they do have a lot of in common. And when you compare penny stocks to crypto, well, they're kind of like, I would not say the same, but they're very similar. I think you agree, Cheds, right?
Absolutely.
I think that you bring up some great points there. And to be frank, I have a lot of concern for emerging markets right now, and maybe those that aren't yet emergent, but that are in their infancy. I feel like, many markets across Africa are going to be in for a world of hurt. Like the people who are already in the most precarious position are going to be, leveraged the most. And I just have a lot of concern for that.
Yeah, I mean, just to kind of like make it perhaps clear on my part, I'm not talking about this is a good idea to invest in it right now, right? I actually stand quite opposite. Like, you're not pretty much like set to like getting an exposure with high risk positions that are considered to be like stocks in general, at least until the latest phases of recession come, pretty much. Right, so that's definitely not the best time to buy any res as of yet. Right now, I still think there's like with 26 million. That's what I believe it to be. That's what I believe to hear recently of the jobless claims and all that. That's definitely going to influence negatively like GDP. So it's like the economic recession is just well to unfold their wings. And it's nowhere near done, I think. So buying in stocks right now, and especially industrial ones, well, I think is a huge weird stuff to do.
I was just saying that as an aside, that I think we all share a lot of concern for the months and years to come. But Cheds, I wanted to come back to you with some of your alt plays and whether or not any of your other fellow traders from the penny stocks followed you into the altcoin market, during that kind of bonanza. You can feel free to do any. I see you moving your cursor on the screen, but yeah, feel free to do any kind of screen share, any references. But I'd love to see some of your Japanese candlestick trading techniques, or kind of how you identify setups in the market.
Yeah, we can definitely take a look at that. I definitely want to give a shout out to my good friend. You may have heard of him, Big Chonas. He's at Big Chonas on Twitter. Definitely one of my best friends.
We do know him.
You do know him. Good. We hang out all the time. He's actually at my house right now.
There you go. Say hi to him.
I will. He's can't hear you, but I'll just want to give him a shout out. And he followed me from the penny stock market. So he's seen a lot of what I've seen, and we kind of talk it out a lot, and that's a lot of how my thought process has developed. So credit to him for that. I guess like some of the top coins. We'll see if any of them pop up. I just have the daily chart here. Let's just kind of scroll down. Let's get starting with, let's say, ADA. I was watching ADA. ADA is interesting. Everyone has different moving averages, and let's just kind of zoom in on the candles. And I like to use, 200 is pretty common, the blue line here. When I use a moving average, what you want to do, in my opinion, is you want to see how the price has responded to it in the past. You don't want to just pick like a random moving average and just kind of for the sake of it to make a point. You can see here, after the price fell through here in the 200 MA, it was rejected on the back test a couple times, came back, floated through, consolidated for a few days. And this is a good example to talk about what you want to look for with these moving average breakouts, where you see kind of on this acceleration here, you have a couple things, but most importantly, you have the volume ticking up kind of over the average, and you have the 834 EMA bull cross. So a lot of people use the 12 and the 26. I use the 8 and the 34. This is a good point to talk about why. Why do I use the 8 EMA? This is the green line. I call it for me, primary uptrend support. And you find a lot of the time on a breakout, you can see here after the consolidation, it kind of broke out of this level, and it's kind of rising right with that 8 EMA. So how does that help you? When you put in this doji on February 12th, it gave you a sense we're going to pull back to the 8 EMA. You had a little bit of bounce, and you pull back to the 8 EMA. All these upper shadows, bears rejecting higher prices, the price above the upper Bollinger Band, you're pulling back to your moving average support. And so you use the 8. I like to use the 8 for that uptrend support. You watch for crosses. So here we have the 834 cross. And one thing you want to keep in mind with a moving average cross is you want to keep in mind the proximity to the price. This is important when you hear a lot of people talking about golden cross, death cross, right? You want to have the price right at where the moving average cross is happening, because the move hasn't been baked in yet, right? When you have the price moving here, okay, it's pretty close, but you had some of the move already baked in yet. You already had some of the move baked in. So when you're using a moving average cross, you want to make sure the price is close to it. We had a nice proximity here. The Bollinger, you had the Bollinger squeeze, Bollinger pinch, price acceleration, 8 EMA support. And then when the move kind of is running out, a little bit of exhaustion, right? You're doing a couple things. You're looking at horizontal support. You're looking at your prior breakout levels. You want to see it hold here on this chart. You had a bearish confluence. You had a couple signals here on ADA, for example, where you saw kind of the loss of this prior support, this prior demand level, and you had the 834 bear cross. So there's your bear cross. Nice follow through on that. We've already seen, and we saw what happened with the price after that, right? That's just using candles. I'll go more into candles in a second. But I haven't looked at oscillators. I haven't looked for divergence. I'll get to that in a second. But this isn't, when I look at this chart, I look at a lot of things. So I look at the 200 MA. I'm looking at the moving average cross. I'm looking at the price, and I'm seeing here, I'm seeing these upper shadows. So there's a little bit of exhaustion happening. You could probably go in shorter time frames. We're a little more than halfway through the day. I could go in a shorter time frame. I'll probably find like a shooting star candle in there in a short time. Let's take a look. All right, there you go. So you're seeing a little bit of bearish acceleration. You see kind of, now here's the 8 EMA. You're starting to lose the 8 EMA. So this is kind of breaking down in a short-term time frame, right? Here in the 1 hour chart, I was kind of sniffing it out in the daily with this upper shadow. So you kind of, day hasn't kind of ended yet, but with this type of move, you're going to expect it to pull back and consolidate. And then where's it going to consolidate to? 8 EMA. So that's kind of an example of how I approach a lot of these charts. I'll look for divergence. If I'm looking for a bottoming chart, so here we also clearly have the downtrend break, right? And you kind of have the downtrend break, a little bit of a back test. When this is happening, you're looking for divergence. And a lot of people use RSI for a regular divergence, and regular divergence is a reversal divergence, right? And hidden divergence is continuation divergence. So when this is happening, a lot of people are using the RSI, and I wrote an article about, in my opinion, again, how to use divergences. It was on like Ask Traders. If you want the link, I can get it to you or whatnot. But I use OBV and I'll wrap this up here and give you a chance to kind of jump in, Birb. I use the OBV for regular divergence because I want to see people loading without the price reversing, right? I want to see, people, like I said, I want to see people buying and without the benefit of a price gain rather than the RSI. Because if you get divergence on the RSI and you've already started to move, let's say you're at 50 or 60 RSI before you even start to bounce, that's going to limit how high you can bounce. So I talked about that. And that's a little bit how I use oscillators. I don't use MACD. There's a million out there. Williams, I use OBV and RSI. And that kind of gives a little bit of a sense of how I might approach an altcoin chart like this.
Yeah, it's fascinating, man. And you did a wonderful job, like getting right in there. And it's just great that the simplicity of Japanese candlesticks and those various moving averages, and then add to, of course, the volume, OBV, et cetera. But it just goes to show, like, if you have the same book and two different people reading it, one reader, may think it was a boring read, didn't have any pictures, et cetera. Another reader, may have seen the secrets of the universe inside of it. It just goes to show it's all in the eye of the beholder. But Adrian, I'd love to get your response to this. I know that you have a specialty and a variety of charting styles, namely Ichimoku, price action, etc. What do you take from Ched's outline here?
Yeah, so I gotta tell you, I'm very impressed and very happy that Ched's kind of like shared with us his approach on that. I am a big fan of Japanese candlesticks as they are myself. I'm a big fan of obviously Steve Nissen, right? That kind of like introduced and expanded very well on the overall idea of Japanese candlesticks, right? It's an old charting technique. It's a very old charting technique. And if I'm not mistaken, that was Murahisa Hama, right? Japanese rice trader.
Like they ran out of rice, so they had to start trading on the futures.
Oh yeah,
It's crazy stuff. Yeah,
I remember that. That's really interesting. But that's how great developments and that how great ideas come that last for the next decades, and that's what
hundreds of years.
Yeah, with Japanese candlesticks. So I'm very happy that you're bringing in and kind of like sharing the same importance of this part. I am also a big fan of consistency with regard to just putting labels on the candles. And what I mean, and I'm actually just referring to Ched's talking about the engulfing, for example, right? So in general, by engulfing, okay, when you put for example, bullish engulfing or bearish engulfing, whatever, Steve Nissen, whose version I prefer to share and to teach, would say that engulfing as it is, like to be legit, to be credible and reliable, should happen only after trends, right? So for a bullish engulfing, for example, to happen, there would need to be a prior downtrend for that, right? And there would need to be like a small spinning top candle followed by a big, green or white, depending on the version, just thrust, right? That would just cover and engulf and kind of like wrap around the entire previous candle body and not only. And the more it engulfs, the more it covers, the stronger the engulfing signal is. But the engulfing itself, especially when we are referring to that as a bullish engulfing and the pattern, or should I say formation, candle formation, then to me, I will not say it's worthless if it's happening just somewhere in the middle of a trend, but it's definitely not as credible as it would be, right? If it happened just somewhere around the bottom of the market reversal.
You're making an excellent point. And, John Bollinger, who created the Bollinger Bands, he actually makes the point that the context of any candle signal is important. So, for example, like a shooting star, like a spinning top reversal candle at the upper Bollinger Band is a better signal than at the middle Bollinger Band. Just like the point you're making, like a nice bullish engulfing is great at the bottom of a trend, but if it's happening kind of like in the middle of like a bear flag or something, in the middle of like an obvious bearish continuation, so that's exactly right. That's exactly right.
Yeah, that's very true. That's what we call, I think, the market context in general, right? And then Japanese candlesticks, especially when we're talking about the formations, right? Be it, for example, like a harami or harami cross, or not only engulfing, but just the hammer itself. I would not really call or dare to call a hammer type of candle when it happens and occurs just somewhere in the middle of a trend for the same reason, right? You need to, for the hammer, which is kind of like by default a bullish candle itself, it needs to find itself in a bullish context. Otherwise, it's not going to work just as it works for the bottom reversals and such
yes
context,
and no.
right?
Yes and no, and that's interesting because you mentioned Steve Nissen, Bulkowski, who did the encyclopedia and he ran the numbers on it. And if you take if I take your point and I extend it and I take that hammer and I make it a hanging man, right at the top of a trend, it actually still leads to bullish continuation 57% of the time. So it's not as good as a reversal candle, but if we boil it down and simplify it, it shows bulls rejecting lower prices, right? That's what that lower shadow shows, and in and of itself, that is bullish. So it's slightly. There's a slight signal, so it's the context. What's the strength of the signal? It's not a worthless signal, as you make a point, but there's still some value in that. So even though that hammer, right, becomes a hanging man, it's actually still bullish.
It's true to what you're saying. What I said definitely is that what I didn't say is that it's definitely not having any value whatsoever, because it's all about the statistics, right? And whenever we are talking about candlesticks or in general, technical analysis, we need to be 100% aware that we are always talking about the probabilities and likelihood and actual statistics, right? So I definitely, cover and get this is like this take from Bulkowski, like from Bulkowski. I think both for encyclopedia for the patterns, for chart patterns, just as much as for the candlestick patterns.
Oh, for the classical one. I bought that, but I haven't read it. I have that book, but I haven't read it. After my cancer memoir, I'm writing a book on trading, and it's going to be candlestick psychology, but also blending East and West classical charting, because like the bullish engulfing, right, you still have the outside. Like in Western TA, classical TA, it's not just a candle body, but you want the whole range, right? The shadows for the outside. So it's like, what's the difference, comparing a bullish engulfing to an outside candle? I feel like that's kind of fun to kind of explore that.
Yeah. I mean, that's I'm quite sure you're going to do a great job on that, bro.
But I need to learn first. That's the key. Is like I need to learn. I've identified my weakness, which is classical charting, and that's what I'm going to start reading about and studying.
That's what you would call a luck, but that's at the same time what I keep calling and referring to as hard work.
I don't know anything about hard work. I play way more video games than my wife wants me to.
Jesus Christ! I hope she's not hearing that.
She's a very understanding woman.
When you can make the work fun, then you're really gaming the system.
That's it, brother.
Cheds, before my last question, I wanted to ask you a quick aside for the Japanese candlestick, charting analysis that you do. How would you say for your own personal style that compares against the very popular Heikinashi candlestick analysis?
So Heikinashi is really just trend. So that's kind of a broader. It's valuable, and you want to use it kind of to compare to your candlestick analysis. You want to use the bar candles. You want to do different things. But you probably want to have your own preferred one that you kind of focus on the most. Heikinashi is good for, you can use some candlestick analysis for a doji. It's still going to represent kind of an indecision, maybe even more so a reversal with a Heikinashi versus Japanese candles, like a doji or even like a spinning top. It's not a green light going red, but it's a green light going yellow. It's that kind of pause signal. But it's more of a switch around in Heikinashi versus Japanese candlesticks. For example. So you want to use it, but you want to kind of apply slightly different techniques to the two.
Before I let you go, Cheds, I wanted to ask, for instance, with that ADA chart, is on the daily and then, looking down into the lower time frames, specifically for, violent moves in say the penny stocks or some of the low cap alts, do you typically trade on a higher time frame, like a daily or a 4 hour, et cetera, or will you get down into the nitty gritty? Because so many of our listeners right now during the social distancing, where they have work from home mandates, et cetera, have a lot more time to sit by the computer with the charts open, et cetera. And there is a big inclination to get back into, a 15, 5 minute, 1 minute time frames. What's your kind of overall philosophy regarding that? Does it stay the same, or do you adopt a different mentality on lower time frames?
I have a lot of thoughts on that, and I had 20 things I wanted to say while you were talking. For me, I feel like a 5, 10, 15-minute chart is like driving without a seatbelt. Generally speaking, if I'm trading, it's more so. That being said, if I'm trading like if I'm leverage trading and I'm doing like a quick flip, maybe 30-minute, 1 hour. But for my kind of understanding, I'm always starting at the daily. I'll work out to the weekly. I'll look at the 3-day and the weekly. And I've been doing my altcoin trades, and when I do them on Bitcoin Live, which I'm a founding analyst of, it's an excellent educational platform. When I'm doing my alerts, I like to use a 12-hour chart for trading. I have a tweet I put out a couple years ago, and it's like the key word in there is scientist, and I believe you should think about it almost like a scientist. With kind of looking at varying levels of magnification, and kind of looking at like a tissue sample, and you kind of move in between those varying levels of magnification. So you can start with a daily chart, but maybe you go to like a 4-hour chart. You want to see kind of what the 4 hours doing, because there's all these different conditions, because sometimes the price is giving you clear signals on a 4 hour. Sometimes it's the 1 hour. Is there some type of event that just happened and it's bouncing? So like if you're in the middle of a bull flag and you want to kind of try to buy on the bottom of the flag and sell at the top, you're going to go to a 15-minute or 1 hour, a lower time frame. That being said, as a general rule, and I should have started out by saying this, is the longer the time frame, the stronger the signal. That's why weekly chart is a great place to understand where you're at in the weekly chart. People have been bearish on Bitcoin. Sometimes I get flack for being too bullish, and I don't think I'm bullish. I believe I'm just kind of interpreting the signals, and the weekly chart's been bullish. And so people are, how dare you be bullish? Whatever. You got to start with a larger time frame and work your way down, knowing that the lower time frame you go, the easier it is for you to get faked out, because there's all these funds that money that kind of has an idea of what you're trying to do. They know you're trying to buy at support, so they're going to break support and they're going to shake you out. And those things will happen in lower time frames. You just got to be careful.
Mm-hmm. And Adrian, I'd love for you to follow up on that if you have any commentary on that lower time frame.
Yeah, I mean, other than 100% kind of like agreeing on that part, is first of all, it's the lower timeframes are definitely much more over leveraged in general, right? They kind of like refer to overall big leverage coming from scalpers that need to use big leverage to kind of like make money on small moves, right? Unless you're a whale, then your kind of your own portfolio works as a leverage in a way. But in general, what I love also about the CMT course, the Chart and Market Technician course that I started like kind of like in recent in December. Jesus, it's half a year long. It's insane how time flies. I swear to God. But what I love about it is that it really opened my eyes with regard to how much and to what extent technical analysis is of much self-fulfilling prophecy, and it's about kind of like realizing like one of the greatest misconceptions about technical analysis is that there are some fucking crazy magical miracle lines that are just simply working as magnets. But the main problem is, or actually the entire world opens up to you, the world of understanding opens up to you when you actually realize that these lines are not lines. They represent some sentiment of investors, right? You kind of like try to gauge on what they would do, what the majority would do, knowing some specific actually code of language, code of trading, which is the technical analysis. And for this way, technical analysis, just like, namely patterns, chart patterns. Like, why do chart patterns exist at all, right? It's pretty much like because we, as traders, do create them. Like people, like from their nature, like our brains, human brains tend to pretty much like, produce dopamine, right? Whenever this hormone of happiness, I believe that's what we call it. Whenever our brain recognizes some pattern, namely some situation that you can refer to from your experience in past, or how you call that, like superstitions, like a black cat, crossing the road. People tend to believe in superstitions in such context, or they tend to see some repetitive patterns and kind of like create it, even just by the same way of self-fulfilling prophecy, because our brains are rewarded with dopamine in a way. For this reason, like we make the patterns exist. And so it's not a question of do they exist, because we already know they exist. We already know that, especially on regular traditional markets, just like, stocks, commodities. You can open up a chart and you can identify like tens of patterns, like just on a daily time frame, for example, right? And it's insane how well it converts in practice. I definitely agree that the pattern, like the larger the pattern is, the larger the time frame is for any candlestick signal or any like momentum signal. As much as I am a momentum trader, it does get a lot of value, much more value on high time frames, right? Because it truly represents the trend, the actual directional movement, right, in some certain direction for the price, how it changes, how it shapes, and it's kind of like funny that people who don't really understand technical analysis, or they don't really understand like statistics, mathematics, well, these are the first ones to come to tell you that technical analysis doesn't work, right? But they don't understand that. But it does not mean that it doesn't work.
That's such a great point. Take an ascending triangle continuation pattern, right? It's like pocket aces versus pocket twos. Like you're probably going to win, but sometimes you lose. And just to kind of piggyback off your point before, the chart works because we think it works, and it represents the psychology of the market. But it's also, the chart right now is reporting on what has already happened. All those things have already happened. And what has already happened is demand levels have been established, right? Where people say they want to buy it, and people see a rising demand level, so that tells you something. So there's things you can glean. If you say it doesn't work, it's because you want it to run the trade for you, and that's not how it is.
Or you're a dupe and don't know simply TA. That's also an option.
Yeah.
Guys, this has been fantastic. I wish that we had the rest of the day to carry on with this, but Cheds, we're simply going to need to have you on for another round. This has been too good, man.
Cool.
Guys, as we wrap up, and we are akin to do, I would love to give you each the opportunity to share any final thoughts with our listeners. So, Cheds, let's start with you. Is there anything that you'd like to leave our listeners ruminating on or thinking about as we wrap things up?
I'm just glad I'm here. It was a wonderful conversation. I enjoy, on Twitter. We were talking about this earlier. It's just with words, it's hard to really get a sense of who you're talking to. So long form communication is good. I've enjoyed it. I appreciate the platform. I would say definitely check me out on Twitter at Big Cheds. If you're just getting started, I wrote the complete beginner's guide to cryptocurrency trading on chedstrading.blogspot.com. I actually wrote it when I was going through chemotherapy. I talk about that a lot in my book. If you're interested, it's on my Twitter account, my pinned tweet. I am a founding analyst, and I'm very proud to be part of Bitcoin Live, best-in-class educational platform for crypto, and encourage you to take a look at that. And beyond that, I hope you've, if you're listening, I hope you've gotten some value out of this conversation. I know I have. And, maybe we'll talk again soon.
Right on. And on behalf of our listeners, I just want to say we all have gotten some deep value out of listening to this. Adrian, what about you, brother? What would you like to leave our listeners?
So again, thanks on my behalf as well for, like all the appreciation goes to Cheds for sharing all his, inputs and insights. That's been great. And definitely congratulations on all your, ventures going on, as well as the persistence itself, because as we kind of like refer and circle back to the very beginning of this podcast, luck is nothing if you don't really help it. Luck only can actually be called luck only after you've helped it enough to be luck. You need to make the luck work for you. That's what I definitely want to kind of like wrap up with. And it means that nothing comes without an effort, right? And everything kind of like every door we kind of like get locked, or not locked, but unlocked to you if you actually do some work, perform some effort, just do some homework assignments, go and improve some knowledge, just like Cheds, like despite he's been killing it with regard to already technical analysis knowledge. Well, I pretty much appreciate everybody and respect everybody who keeps going, who just keeps going and striving to be a better version of yourself, of themselves. And that's what makes you a successful person. And the success is kind of like universal, when you find such a formula to do your best every day, to try your best to be a better person, to improve your knowledge, to improve whatever you're dealing with, okay? Day by day, day in, day out. Well, the success comes to you and you can do nothing about it. And if it comes to trading, that works the same.
Amen.
Right on. How can I add anything to what's already been said? Adrian, Cheds, thank you guys so much for joining us today. Listeners, thank you all for joining us as always. Everybody out there, stay calm, stay focused, get better where you can, and we will all make it through this thing. Thanks so much for joining The Nest Show. I'd like to thank our listeners for joining this episode of The Nest Show. We invite you to connect with our guest on Twitter, where Adrian can be reached at CryptoBirb. I am at BenjaminT1717, and Cheds is at Big Cheds. Cheds' work can also be reached at Bitcoin Live, link below, and chedstrading.blogspot.com. If you've appreciated the depth and breadth of what you've heard with us today, subscribe to our podcast and find our landing page at thebirbnest.com. We have a vibrant Discord community which acts as our central hub of operations, and we welcome you to join us at thebirbnest.com/Discord. We also offer an extensive free bulletin on emerging crypto market trends, exclusive undervalued gem reports, and in-depth expert technical and fundamental analysis at thebirbnest.com/bulletin. We always appreciate engagement from our community, which of course means liking the video and subscribing to our page, where we insist on bringing you the highest quality content available. Also, we're happy to incorporate tips and topics from our listeners and encourage you to email us at thenestshow@thebirbnest.com. This podcast is brought to you by the Birb Nest. Thank you, and trade on.